I've been really curious lately. Does it make sense to buy virtual real estate? Everyone knows about bricks and mortar on the ground, in the soil, on the dirt. But in the metaverse, does it make sense to invest in real estate there? Do the same principles apply? If you can't afford real property investing on Earth, and you have less funds and you're interested in the metaverse and whether to invest in real estate there, or you're just curious, even if you can afford it here, then this video, I'm going to be sharing my thoughts, the thoughts of Mark Cuban, and how whether or not you do invest on the metaverse, these key principles apply on Earth here in Australia as well. So carry on watching. My name's PK and I help people build passive income through property investing using the Property Investment Accelerator, using data without needing $15,000 on a buyer's agent every single time. And this channel exists to discuss property investing, the economy, and financial happiness. So subscribe, let's go. Now what you're seeing right in front of me is an article by CNBC, and it's saying Mark Cuban, buying real estate in the metaverse is the dumbest idea ever. Now, let's go into the rationale and what he's saying, and I'll share my thoughts, okay? So he's saying that buying digital real estate in the metaverse may not be the best use of your money, according to this billionaire, Mark Cuban, which I think a lot of people know. All right, he's actually going much worse and kind of being quite aggressive about it. It's not based off any utility. In the physical world, real estate is valuable because land is a scarce resource, right? And that's what economics is all about. It's about how do we tap into scarce resources, unlimited wants, unlimited desires, but scarce or limited resources. How do we allocate them? However, that scarcity or the economic principle doesn't apply in the metaverse because there's unlimited volumes that you can create. That is what Mark Cuban is saying. Now, stick with me. Now, it's really interesting. Like in some cases, virtual real estate has actually gone for as much as a real house on Earth. Republican Realm, they're an investment firm that owns and develops virtual real estate. They dropped a massive 4.3 million on a property within the sandbox on the metaverse, according to the Wall Street Journal. That's pretty phenomenal. And you guys might have heard this, right? A virtual plot next to Snoop Doggy Dogg's digital mansion within the sandbox was purchased for $450K by an NFT collector, some guy here. So, like it's been a big thing. It's been an infatuation, but does that mean that we should be interested now or in the future? According to this, the virtual real estate bubble has popped, unlike basically any real estate market in the world, all right? So on average, as of August, the average sale price for a piece of virtual property on the metaverse, it was $14,000 according to WeMarket. That's down 61% from a peak average sale price of $37,000. So it's cheap anyway, right? This is USD. It's cheap, but it's just popped. And I can tell you nowhere in the world has real estate ever really popped like that on average, on aggregate, especially, there's some instances in the US, but definitely never in Australia. So the unpredictable nature of the metaverse and cryptocurrencies, financial advisors are recommending only invest as much money as you are prepared to lose. Now, I can't give financial advice, right? But it's clear that investing in real estate on the metaverse is probably not the best idea. But how does that relate to the rest of us? Like the rest of us may not even be thinking about investing in that kind of halo land. How does it apply to principles here on Earth? Scarcity. You heard it before. And right now, like everyone is saying that houses are so expensive, but units aren't. This is an Australian context. There's a big disparity now between the price of units and the price of houses. You might have seen it on various media articles, even on my channel. And so a lot of people, especially in Sydney and Melbourne, maybe to some extent in Brisbane, they're saying, look, I can't afford a house, a house of $1 million plus. I'm going to buy a unit as an investment. I'm going to buy a unit because that's all I can invest. All I can afford in Sydney, Melbourne, Brisbane. And I just want you to pause. Check out this chart courtesy of Jeremy Shepherd. This is illustrating the same principle of scarcity. People are thinking right now that unit prices are cheap, and they are cheap because check this out. In the last 2 or 3 years, unit values as a percentage of houses have dropped off. See that end of that chart there? That disparity, this is unit valuations as a percentage of houses. So they've become cheaper and cheaper relative to freestanding houses. And this disparity has opened up. And that is what everyone's saying is that, unit prices are going to catch up. This fantastic opportunity. But data is so interesting that when you look at it in context, zoom out, look at the broader picture, it tells you a completely different story. If you just looked at the last 2 or 3 years, the COVID scene, right? All the international students, migrants, hospitality workers who typically rent apartments and buy apartments in city centers, CBDs, they've gone to their own countries. Hence, the value of units came right down. And you might think that's a great buying opportunity. That's all I can afford. So let's do it. Zoom right out and you see that actually over the last 33 years, 32 years, unit valuations as a percentage of houses are coming down and down and down. Sure, there have been instances where they've gone up a little bit as a percentage of houses, but by and large, the broader trend is down. And why is this? It's because of scarcity, okay? Because houses have land content. You're not building more land. It's not like the metaverse. You can't build more land. That's it. Okay, you can, however, go upwards. When you buy a unit, you're just buying airspace, and there's unlimited airspace. You're just buying a pocket or bubble of air going up on a 50-story, 20-story, 10-story, 100-story tower. That is not rare, that is not scarce, and that is the key reason why the unit valuations as a percentage of freestanding houses have just gone down and down. And my prediction is that when we discuss on the channel in 20 years' time, hopefully I'm still doing it, it'll be down to about 30 or 40%. Who knows, but that it could be like that. So what's the point of this video? I'm not a financial advisor, but my thoughts are don't invest in real estate on the metaverse. Mark Cuban knows more than me. Let's just ride on the shoulders of giants. And if you are looking to buy real estate in Australia on dirt, on planet Earth, then think twice, 3 times, 4 times, 5 times before buying a unit. Not all units are bad. There can be some good units with scarcity, with some land content like townhouses, villas in some locations across Australia. But units as in apartments in high-rise, mid-rise towers just make for terrible, terrible, terrible investment decisions. Hopefully that brought you value, guys. My name's PK. If it did, smash the subscribe button, give it a thumbs up. I'd super appreciate it. And level up your knowledge. These types of things are so fascinating to learn, and you can make money once you have enough knowledge. I'll leave links below to my podcast on Spotify, Google, and Apple Podcasts, and also my Facebook group where we talk about this stuff every single day. I love talking about this. I'm so grateful for you, my community. I hope that you stick with me for the next one. Catch you later. Bye.